What is edge in the context of the financial markets, and how does it come about?
It can be many different kinds of edge, but in the end, something that makes you money is something that either you know that nobody else knows, or something that you can do that many other people can't do.
You managed the Jane Street cohort for Sam Bankman-Fried.
He was definitely noticeable. He challenged people to explain things. Sam was like, day one, I'm going to ask all the questions. I'm going to figure things out. We've seen a huge growth in retail trading post-COVID. Prediction markets are growing in the last 5 years. The world is going in a more pro-gambling direction. Sports gambling is legal now. It's what I'm calling the gamblization of everything.
Who is the type of person that should become a quant trader?
I think you have to go all the way back to
Augustin, thanks so much for doing this. What is edge in the context of the financial markets, and how does it come about?
the way I define it in the book is edge is something that either you know or you can do that the marginal participant in that market either doesn't or can't. And so it can that can mean many things depending on the context. For example, if you have really, really good technology that lets you trade really, really fast, that's a source of edge. If you have really good models developed by very good, knowledgeable researchers, that's another source of edge. If you're the only company that has access to a particular market, maybe as a foreigner, that could be another source of edge. So like it could be many different kinds of edge, but in the end, something that makes you money is something that either you know that nobody else knows or that many other people don't know, or something that you can do that many other people can't do.
And so I want to ask a little bit about your time at Jane Street. You worked there, you worked in the London office. And one of the things that I think fascinates a lot of people is they see these stories in the news of these top quant shops raking in billions and billions of dollars. But it seems like a black box. Like it just seems, we have the efficient hypothesis of the markets are efficient. And obviously, if these guys are capitalizing on all these different inefficiencies, that can't 100% be true. But I guess my real question is, how do these quant shops, build these organizational structures and hire talent that can continuously generate and execute on their edges and make money?
Yeah, I think a lot of it comes down to like knowing what you're good at and trying to be as good as you can at those things. Like it has to start with something that you're particularly good at. I think every great trading firm has an origin story that looks something like, this is something we figured out how to do that was fairly simple, pretty self-contained, that we could start with and build from there. I think that's one of those things where if you start trying to build a massive firm from day one that does everything, you'll probably fail. Trading is one of those things that yields to incremental improvements. I think one of Jane Street's biggest edges is that whatever it is that they do, and trading requires a whole lot of skills and a whole lot of people involved. Whatever it is that's the worst thing that they do, they're pretty decent at, right? And so they're very good at some things, but even their worst thing, and I don't necessarily know what that is, they're still pretty decent at it. And I think that's the nature of trading, right? Like if you're exploitable, then you will be exploited. And so kind of plugging those little holes over time is one of the best ways to sort of get better. And then colonizing adjacent markets is probably the other natural way to go about it. You start with a small thing that you can do well, and then what's the next thing? What's the thing that's most similar to it that we're not doing, and start doing that thing?
I guess this is more a specific question about, executing on edge, or rather, well, it's just about trading in general. How do you know you have edge? How can you be sure? Let's say you have, something that's there and a pattern that was present. Let's say only in the last 12 months, you're thinking about it rationally. Maybe it's to do with crypto. And, you're thinking rationally and you think that the trend will persist. How do you know that that's something that's profitable and that you can actually tangibly trade in a way that to make sure that you'll make money?
So I think if we're being honest with ourselves, I think the answer is you can't. You can't know for sure. And so all you can really say is statistical things, right? Like I did 1,000 trades and I made money on 55% of them. And the amount of money that I made on the 55% was about the amount of money that I lost on the 45%. Like I have some good statistical bounds on what is the probability that I just got lucky, right? And so certainly that's what pushes quant trading firms in the direction of doing more trades, more high frequency stuff. in part because you have access, it gives you more data, but also because it gives you more statistical certainty that you have something. If you're doing something more discretionary, and I have lots of friends in crypto that do more discretionary type trades, it's a lot harder to say, yeah, like I definitely have edge, or I definitely can do this thing. An analogy that I would give, if you don't mind, is with poker, where if you just look at the statistics of win rates and that sort of thing, and you're trying to figure out, is this person a winner in this game? It takes like 100,000 hands or more to really figure out, like, is this person actually making money, or are they just on a big, massive heater? But if you look at their hand histories, if you look at the individual decisions they made, a really good poker professional can, in a span of 10, 100, maybe at most 1,000 hands, can tell, yeah, this person is good, this person's beating this game or not. And so you can sort of think about that second kind of studying a poker player as more applicable to discretionary trading. Like, what is the thought process? What is the way in which they're developing edge, thinking about it, improving it? How do they self-regulate? How do they control the, things that happen? Is that a statistically significant sample size? Perhaps not. But we have all this other information we might be able to integrate to get to a better sense. Do we know for sure? I don't think so.
Oh, fascinating. I think that's a very interesting way of looking at discretionary trading, analyzing, looking at the inputs that one has taken in, the information they were analyzing, and how they synthesize that. I think that's a great insight. On that note, so I think one of the things you mentioned in your book, The Laws of Trading, is that there are extreme events that can occur. And another thing you mentioned is that there are quant shops that aren't truly fully systematic. And what I mean by that is it still requires someone to turn the thing on and off and make a decision on whether or not the market conditions are ones in which the model will behave as it has in the past and thus make money. Now, I'm curious about that. During crises, moments of crises, such as, let's say, dot-com crash or 2008, or even 2020 or 2022, these periods of insane volatility. Let's say you're trading in the bait, you're trading market movements, but you're using data that maybe is not applicable to the current regime. How does a skilled trader rather navigate that?
Yeah, and I think it depends a lot on the kinds of strategies that you're running. If you're running something that's very automated, very systematic, you basically just have to make a judgment call about whether the situation that you're in is in sample of your training data, whatever you use to train your model. If it is, great, keep going. If it isn't, then you have another judgment call to make about whether, given that it's out of distribution, is this going to be a good or a bad time to turn the machine or the system on? So if you're a systematic trader, there's still a couple of maybe decision points. It is worth noting that in times of crisis, like when things are very volatile, et cetera, those are generally very good times to trade if you are not forced to trade, because kind of the nature of the volatility is that people are forced to trade. Maybe there's some liquidation somewhere that's forcing somebody to sell out of a position. Maybe there's like a margin call, something, right? That's part of what's driving that volatility. Big moves drive big trades. If you're not constrained in that way, i.e. if you have enough risk capital to deploy during those times, those are very often extremely good times to trade. And so maybe your system doesn't actually have to keep nearly as much of the relative edge because there's enough absolute edge to maybe make up for that. And so that's another thing to keep in mind. I think in particular of market-making strategies, right? Like when things are very volatile, then the value of somebody always being able to buy and sell at a price goes up. Like that is a more valuable service when things are volatile. And so you should be, if you're doing things right, making more money when things are volatile. So that's maybe kind of on the systematic side. And then maybe on the more discretionary side, which I'll admit, to be clear, I'm not nearly as familiar. Again, it's about all those other soft things, right? Like, am I making good decisions? Am I understanding the world properly? Consulting with people you trust, like all these sorts of things factor in.
Now, I want to go back to what I kind of talked about towards the beginning of this conversation, where you're talking about people seeing the news, seeing all these quant shops, quant trading firms, quant funds, with these, insane amounts of profits, just raking in huge sums of money. And it feels to me as an outsider looking in that these firms have all the money, they can hire all the talent in the world, they have access to the best technology. And so if you're a smaller player trying to break into the scene, maybe you have a little bit of edge. It feels like, well, even that, like even having a little bit of edge seems to be something that is very, very difficult to have when all these firms are raking, capturing all the edge, capturing all the inefficiency rather. And I'd like to hear it from you. Where do you see the future of quant trading shops, quant funds, maybe even multi-managers? Do you think that they will continue to get bigger and that smaller players are going to essentially be wiped out? I'd love to hear your thoughts.
Yeah, so there's a couple things there. One is, I think there's an interesting question of why is it that the profitability of these companies, it's definitely gone up in the last 10, 15 years. Like, what is the source of that? We could maybe dive into that a little bit later. But to address your specific question, yeah, I think it actually, the waterline has risen. Like, it's much harder as a small shop with probably a big technological research cost disadvantage to compete with these companies that are progressively getting more automated. Like, it used to be like the standard answer was like, go figure out how to trade the bottom end of the Russell, because big quant shops, it's kind of just not worth their time to focus on that, right? I think that's still somewhat true probably, but less so than before, because the marginal cost of adding some more marginal product just keeps going down and down as automation just keeps making things easier for large firms. And also those things just trade more anyway. So there's just probably more money there to begin with. And so I do think it gets harder and harder for individuals, for small shops to compete. I definitely believe that. I think there's definitely a consolidation that's happening. And probably the most obvious places in options where used to be there was probably like a couple of dozen options market making firms that could, make a decent living at it. But the technological lift, like the sort of the fixed costs of being able to be an options market maker just keeps going up and up and up. And that kind of prices out a lot of medium and small sized shops. And you've seen this consolidation in the last, again, like 5-10 years.
And I want to sort of jump on the point that you made earlier. So, begging the question of why it is that the profits of these firms has gone up and up and up in the last 10 years.
Mm-hmm.
Would love to hear from you.
Yeah, look, I certainly don't know. It's something that I and my friends kind of wonder about. I think one plausible source is like the world has gotten richer. And so like there's just more money out there. That's fine, right? The other thing is, to the extent that like old line investment banks like Goldman or like Morgan Stanley or JPM, they used to internalize a lot of their client flow. And that money used to be made by these investment banks. I think that's changing, right? Like you see a lot of these quant firms, for example, entering into bond markets. It used to be very much controlled by investment banks. The investment banks are being disintermediated. Like the end customer, say it's like some pension fund in Brazil, is going straight to the ETF market maker to say, hey, what's the price you can make me on $100 million of EM? Like that, like the middleman is getting cut out. And so maybe a lot of those profits are just kind of getting shifted in the direction of the firms that are actually taking the risk as opposed to just being the middleman. So that might be one possibility. Or maybe the second possibility, in addition to the world getting richer. I do also think, sadly, that in some countries, certainly like India, the United States, we've seen a huge growth in retail trading in the last, we'll say like post-COVID, if nothing else. And so like there's a lot of quant firms making money off of a lot of small retail people gambling that they shouldn't. Or I mean, I don't want to say that they shouldn't, but they're definitely not making money through gambling, right? And we definitely see a trend, I think, in the last 5 years of the world is going in a more pro-gambling direction. Like sports gambling is legal now. Like lots of people trade now. Like prediction markets are growing. Like it's what I'm calling like the gamblization of everything. And yeah, like if you're making markets in a growing market, you're probably going to make more money.
The thing you touched on there of the gamblization of everything, I agree. And I think it's ridiculous that Kalshi has done their partnership with Robinhood, and on your brokerage account, you can literally be sports betting. Like for me, that's something that doesn't make any sense to me. I don't know how that's
Kalshi doesn't call it sports betting, right? They call it predicting events, right?
Yeah, but like, it seems to be that if you're betting OKC over the Pacers, that doesn't really seem like a data-driven, like insightful I don't think anyone really has as edge there, especially a retail guy. And they're frankly they can gamble away their life savings. Um, on the note of trading prediction markets, I just finished my undergrad in London at UCL. I
Hmm.
studied math and physics, and a lot of my friends, studying math, studying physics, a lot of them, were interested in becoming quants. And in London, it's a financial hub. Whenever I'd meet someone who studies maths, he'd always be like, "Oh yeah, I want to become a quant. I want to work at one of these large market makers or maybe a big hedge fund." And one of the things I think you talk about a lot is that these firms hire for raw talent rather than knowledge. And I guess my question right now is, who is the type of person that should become a quant trader versus the type of person that's better off seeking a career in something that's I guess easier to get into?
Yeah, I think you bring up a good point, which is the number of seats that are at good shops doing like interesting work is actually relatively small, right? Like probably only a couple thousand new hires per year tops around the world in what I would call like a good quant trading firm. There's lots of second tier and third tier firms that I don't know that you'd necessarily want to go into. But I think you have to go all the way back to like, why is it? Like, why do people want to do this? Why are students so motivated and interested in doing this? I think if you ask, and I've talked to a lot of them, if you ask students like, why this? Why is this the interesting thing? They'll say, oh, some combination of, I think the math and the science, the math and the stats and the AI and the ML is interesting. But there are plenty of places to apply those sorts of skill sets. So it's not necessarily that. I think if you dig deep, a lot of the time, the real answer is it's a high status thing to do, right? Like across, like if you go to MIT or Harvard or whatever, like what are the high status internships to get? Well, it's the Jane Street internship, it's the HRT internship, maybe it's the OpenAI internship. I don't know. So like people do it because it's the high status thing to do, not necessarily because that's truly what interests them. And the other thing is, again, I talked to a lot of people who say, oh, I've wanted to be a trader my whole life. Like this is, it's been my lifelong dream. And I would argue that probably the true answer is I wanted to be rich my whole life. And I think this is my best plan to get there, right? Which is a very different thing. And I think that's, getting back to your question, one of the things that's hard to appreciate unless you, do an internship or work at these places is the vision from the outside of what the nature of the work is very, very different from what the actual work is. Rightly so, because it's very secretive. Like you don't get a sense of what the job is. And yeah, some people find it super engaging and fun, and yeah, they do make a lot of money. But for other people, it's like, this really isn't my life's work here, and but I'm kind of stuck here, right? And so that's kind of a thing I think for students to really look in the mirror a lot. Like there are a lot of really, really interesting places to work, a lot of interesting things to do. The world is a fascinating, huge place. Quant trading is just a tiny sliver of what's interesting.
So going back to the concept of edge that we discussed earlier, how should someone apply the concept of edge to navigating their own career or even life decisions?
Yeah, again, goes back to what is the thing that is I don't want to say unique necessarily, but what is the thing that differentially you're kind of good at, right? It has to start with that, I think. No matter how much I have a dream of becoming a professional sprinter, like I don't have that edge, right? I don't have the speed. It's not in me. I shouldn't try, right? I mean, I should do it for fun. I should enjoy it as a pastime, but I shouldn't focus on trying to make a career out of being a professional sprinter. And so I think the idea of finding your own edge, that's really hard. I think part of what university gives you over the course of those 4 or whatever years is an opportunity precisely to do that. You take some classes. It's like, oh, this is kind of interesting, right? There's sort of a natural inherent interest in understanding, I don't know, 17th century London or whatever, right? Like you didn't know you had that interest, but university gave you an opportunity to discover that, right? And so where you're interested in something, you will spend the time to learn about it, to get better at it, et cetera. And that can become an edge for you over time, sort of like an emergent edge, let's say. Where does that turn into like an actual edge in terms of making money in a career? That's another thing you can kind of discover in university through internships, et cetera, right? Probably you have at least 3 opportunities to do internships in university. You should probably do 3 fairly different things that seem reasonably interesting to you and then compare. right? I think it's a very, I think the best way is a very sort of empirical, experiential way of figuring out what your personal edge is. And once you figure that out, then a lot of things become easy. It's like, oh, I'm good at this and I enjoy it. It's like, okay, well, I should probably go try to do that, right?
And once you're in those places, so I guess let's take trading as an example. How do you how do you learn the skills faster than anybody? So let's say, one of the things I've been seeing on X recently is you talking about how I think you were the head of, or like you managed the Jane Street cohort for Sam Bankman-Fried. And, I guess we can touch on that later, but if there was a trader from that cohort that would go up to you at the start of the internship and he'd say, Augustin, I really want to learn as much as possible. I want to become, let's say, the best trader among my cohort. What would you tell them?
So I think I would tell them the thing I hope I did tell them during those times, which is I think on day one, the thing I like to say is on day one, there is no question that is too stupid for you to ask. You should be asking more questions than you think you should be asking. You should be trying to deeply understand as much as you can. I have yet to see an intern that has gone too far and asked too many questions. I have seen many interns that haven't asked enough questions. And it's not just asking questions for the sake of asking them. I think a lot of the things that you learn are learned because you sort of self-select into certain paths and certain kinds of trades or kinds of desks or kinds of ideas. And the only way you're going to figure out what interests you and what you're good at is by asking questions and learning as fast as possible. I'd say that's thing number one. The other thing is the internship is an opportunity for you to figure out, both for the company to figure out whether you're a good fit for them, but also if this is a good fit for you. And so throughout that internship, you should be asking yourself, what's the best case thing here for me? Like, what is the kind of work that I'm going to be doing that I'm going to really enjoy 2 years from now, 3 years from now, 5 years from now? You may not know the answer to that, but I think that's, again, what guides getting good at something. It has to come from some baseline deep interest. Like, to give you an example, I certainly don't like to read financial statements of companies. I don't like to read prospectuses of corporate actions and stuff like that. But some people love that. They just find it inherently fascinating, right? They're just they'll read this 80-page prospectus on some bond offering or some tender offer or something. They'll read and and on page 34, they'll notice something. It's that's kind of weird. Think that means X, Y, and Z, and they'll go price it out, and they'll go look at the market, and they'll be like, oh, wait a second, that doesn't seem to make sense. And 90% of the time, you talk to somebody else, and they tell you, oh, no, you misread this other thing on page 74 that totally counteracts that. But sometimes, oh, yeah, actually, there's a trade to do, right? You're never going to find that thing unless you're actually really interested in reading these prospectuses. That's an example of a thing that, you could be a great trader at that thing. You're not going to know until you start trying things out.
And let's say, you're seeing the internship cohort, and let's say they're 4 weeks in, 5 weeks in, or maybe 6 weeks in. Can you tell from that moment who's a great fit for Jane Street 5 years down the road? Like, this guy's going to be a superstar here? Or is it still somewhat vague after those first 3, 4, or 5 weeks?
I think it's a distribution. I think some people you can tell, they just get it day one. Maybe they had some prior experience, I don't know, they were sports bettors and they actually made money, or they were poker players, or it doesn't matter. I'm not saying they had to be game players, but there's something in their past that sort of kind of pre-trained them for trading, and then they jump in and they just go, right? And you think, yeah, this person's probably going to be pretty good. Most people are there's also the other extreme where you have somebody who's super smart and passed all of the interviews, got the offer, etc., but they don't get it, right? Either they don't get it or it's clear that it's not for them. There are a lot of people who are really, really good at math and solving problems. It turns out they just don't like trading. The reward system just isn't for them, right? They care a lot more about solving the math problem than making money. And in trading, in the end, you kind of have to make money. So maybe that's another piece of the tail on the other side. And then there's just the meaty middle where you don't really know. I think it's very easy to get overconfident, both in interviewing and hiring, but also in running an internship program and saying like, oh, this person's going to be great, this person's going to be terrible. It's a lot harder than that. Like people evolve over time in weird ways, and it's hard to predict.
What was Sam Bankman-Fried like? Because you said you were you met him and he was an intern while you were managing the cohort. What
Yeah.
was he like? Was he good?
Yeah, so he was definitely noticeable. He was the most noticeable person in his class. Like mostly in a good way, to be honest with you. Like he asked lots of questions. He challenged people to like explain things and, oh, this doesn't make sense to me. And look, as an intern, you're coming into, very well-regarded trading firm. Most people are just kind of intimidated the first week, 2 weeks, etc. It's just like, let's just kind of be quiet and like not make waves and not get noticed too much and just like not screw up, right? Like we're all motivated by the not getting yelled at, right? Sam wasn't like that. Sam was like, day one, I'm gonna ask all the questions, I'm gonna figure things out. Um, and yeah, so he was very noticeable in that respect. And he was sharp and quick and everything. Um, I think personality wise, there were questions, definitely. But yeah, he's a pretty good intern.
Now, this is a funny story, but so my dad's office in Hong Kong was in the same co-working space as FTX's ex head office there,
Mm-hmm.
and so there's this photo of Caroline Ellison, that's is very iconic with like this green behind her, and I remember when that photo was going like was going crazy on the internet. I remember seeing that and thinking, hey, I used to go there every now and then as a dad. Um, but one of the crazier stories, and I remember going down the elevator one time and I see a guy with cargo shorts and slides and longish hair. And this is back when FTX was still doing quite well. And I remember clocking the fact, oh, that's probably Sam Bankman-Fried. And that was, for me, that was like, whoa. And then I saw the news later and I was like, that's crazy. But my question, I guess, about SBF, and I don't know if, did you follow FTX closely, having managed, his batch and knowing him, were you, I guess, following like their story, crypto trading? Um,
Yeah, I knew
were there
plenty of
any,
people who worked at FTX. Yeah.
oh wow. Were there any like red flags you saw, before the whole thing, I guess, came crashing down?
No, no, I didn't see any red flags. I was on the outside. Like it was, um, like, I think we all knew that Sam was incredibly ambitious and aggressive. And I think people who are, and he stated openly in many podcasts and interviews that he said, he's risk neutral, not risk averse. And in my experience, people who say they're risk neutral, are not risk neutral. They're actually risk seeking. They just call it risk neutral. And so maybe that was like a thing that I would say, I think we people who knew him and tracked him at FTX thought, yeah, like he's making a really big bet, right? And it could go really, really well or not so great. I don't think any of us actually thought that it was billions of dollars of fraud. That came as a shock to me.
With some of your ex-colleagues from Jane Street, the ones that have left,
Mm.
typically, what is the reason for leaving and what do they tend to do afterwards?
It's actually, I would say it's pretty heterogeneous. Like some people leave and go back to academia, like, go back to being a math prof or something. Some people just retire, obviously, like, life is good, right? Why am I going to keep working into my 40s, 50s, 60s, etc. Um, Other people, they go to other firms, right? Competitors. I think there's been quite clearly a fairly steady drip of talent from J Street to other companies in the last 5 years. I think there's a very natural set of reasons for that. Um, some people just kind of go off and do stuff on their own, like trading on their own, and kind of maybe bring some of that skill set into like a tiny, like I don't have any bosses. I just kind of work for a few hours a day and make money, and it's okay. So yeah, and then yeah, like people like me who the hell knows what it is that I do now.
What do you do now for
So
our audience?
yeah, I am currently I moved to Prague last summer, and I'm currently working at an AI startup that is applying reinforcement learning to financial markets. How about that?
How much can you talk about it?
I mean, I can talk about it a little bit. I think one of the things that is true about quant trading is that historically at least, there's a very clear distinction between the thing that tries to figure out what something's worth and the thing that takes your belief about what something's worth and turns it into a set of trades that you actually do. Right? You can kind of like divide the quant trading pipeline into these two pieces, right? And so the first piece, like, yeah, it gets a lot of AI and ML applied to it, like take a bunch of data and try to figure out what something, like what the fair price is, et cetera, et cetera. This other piece, the like, okay, I have a fair value. How do I turn that into a set of trades? Has historically been very heuristic, very manual, very not manual in the sense of people actually executing, but in the sense of the rules that the system uses in order to decide like what trades to do. Has historically been very, we'll say like heuristic. Because it's hard to get a machine to learn that, right? You have to sort of understand how to interact with the market, how the market reacts to your actions, et cetera. And so that's a very natural setting to use reinforcement learning techniques. And so this company was founded by a bunch of ex-DeepMind people who had applied it to poker and that sort of thing. And so it's kind of bringing that reinforcement learning background and trying to build a system that essentially can learn what actions it should do in a situation, as opposed to like kind of instead of having these two little pieces, we'll just kind of do one end to end, figure out what to do from the data.
And so is the firm trying to trade its own money? Is it trying to raise money to trade, or is it trying to provide the service to, I guess, some trading firms that maybe aren't so good at, when they have a estimate for the fair value of an asset, for example, maybe they don't know how exactly to go about trading that. What are you trying to do?
Yeah, so I am a firm believer that if you have an edge in the market, then that edge is valuable in inverse proportion to the number of people who either know it or can use it, right? And so the natural setup for something like this is essentially a trading firm where you're trading your own capital or some version of it, and trying to make money the old-fashioned way.
No, lovely. Lovely. I want to gear our conversation now towards advice for young people. There's so much changes happening in the world today. And, even going on X or Instagram, there's jokes of computer science majors being unemployed. There's this one of like, you see your friend 20 years later, he studied computer science and he's like on the side of a road and you're like, whoa, I didn't recognize you. All these jokes about how generative AI is coming for everyone. And real serious, serious discussion on it as well. I personally, I do believe that, um, when I think about the middle class in the future, or even young people now, I think it is very difficult for those who aren't in the top percentile of intelligence or family background, wealth, connections, etc. What do you think about what I've just said, and how should young people navigate these changing times?
Yeah, it's a great question. I have two teenagers myself, and so I spend an inordinate amount of time thinking about this. And I will admit at the outset that I don't have any great answers. So, and I would even go further. I would say anybody who claims to have great answers is probably either trying to fool you or trying to fool themselves. Unclear. Because it's very unknowable, right? Just think about AI timelines, right? If your AI timeline is like, oh, 2027 we'll have ASI, and like therefore a machine will be able to do any work that a human can do today, that's a very different world from it'll be 2040 and AIs will be useful assistants to humans, but like there's no ASI, on the horizon. Like, these are two very different futures. Uh, and so, like, yeah, in the case of the former future, I don't know. Like, maybe we all get turned into paperclips, and who cares, right? If that's the case, if we all get turned into paperclips, well, like, I'm not going to worry about that branch of the probability tree because there's nothing I can do about it, right? So let's think about what we can do something about. And I think uh, I was talking to a friend about this a couple of weeks ago, and he said, look, the thing I tell my kids is you have to figure out how to be adaptable. I think that's the number one thing. And I at first I thought that's kind of a cop out, right? Like, yeah, it's always been useful and important to be adaptable. But as I thought about it more, I do think that is a key component of it. Like, it is when the world is changing fast, it is really important to be able to understand what is going on, understand like little pockets of interesting things to be able to do and be able to jump into those quickly. I think, well, I think I I wrote about this week on X is that cognitive tools like AIs, like LLMs, et cetera, uh, are like force multipliers, right? Like you can either use them for good or for bad, right? You don't have to you don't have to write down and do math by hand anymore. We have calculators. Mm, But if you don't literally know how to add 3 and 4, you're probably not doing so great, right? And so you can use a calculator as a force multiplier, right? Doesn't mean that it replaces you. It just helps you do whatever it is you do better. And I think these tools kind of look the same way to me, right? How can I use these machines in order to make me better at what I like to do or what I want to do? And how to avoid the pitfalls of endless AI slop on social media, right?
Let's say you're in a position where your job can already be done by,
Mm,
agents, like a simple, I don't know, you're a junior software engineer and you're building the front end of which Cursor can already do,
mhm,
but you still have a job.
mhm,
Um, how do you navigate that situation knowing that full well maybe you're being kept on for goodwill,
mhm.
and that you have no security whatsoever?
Well, I would say you don't have any security anyway, right? Like, especially in the U.S., right? At will employment is a thing, right? Like they can lay you off anytime they want. They don't have to give you a reason. So in that sense, I don't think it's especially different, right? Like if the thing that you're doing right now isn't obviously economically valuable, you should figure out like what to do that is economically valuable. In that particular instance, like you should really think very, very hard, whether you're at a startup or a big company, it doesn't matter. Like, where does the value come from? I think this is a really important thing that's not obvious, especially for young people, because value comes from all sorts of weird places. Like I would say most like SaaS companies, right? Let's just use a SaaS company as an example in the last 10 years. The value doesn't come from the technology at all. The technology is super mature. It's a complete like you use like a Postgres database on the back end, and then you do some GraphQL and you write some front end and React, and like there's no edge there. There's no value there. The value in most SaaS companies, let's just say an enterprise SaaS company, is probably like in the biz dev and in the marketing. Like it's probably the people who can pick up a phone and like call the person in the company that knows exactly the person in the potential client to call to set up the meeting, like to show the value of your platform, to keep that thing sticky. Like that's where the value is in a modern SaaS company. It's not in the technology at all. So it should be unsurprising maybe that if you're writing code at a enterprise SaaS company, like that you're probably pretty replaceable. You have been for a while. It just maybe hasn't happened yet, right? You've been replaceable by a team of developers in Ukraine for 10 years, 15 years. So I don't think there's anything new there. If you really want to understand like what it is you should do, you should figure out where the value is and figure out how to increase that, right? Maybe that's software development, maybe it's something else. It completely depends on the situation.
And if you're a young person today, um, where would you live to maximize your prospects of, I guess, you maximize your options and maximize your chance of success? And I ask you that question because you've lived in London, you're
Mhm.
now in Prague, you're from the US. Um, where is the best geographical location today for becoming a successful person?
Yeah. That's an interesting question. I think it depends. It probably depends greatly on what it is that you want to do. It's kind of a transparently a boring answer. Like if I want to be in manufacturing, I definitely want to be in China. Like that's where all the best manufacturing happens. That's where I'm going to learn the most, right? As a young person, I probably want to optimize for learning more than anything else. Like finding the company that will help me accelerate my knowledge and skill set the fastest is probably the thing to optimize for. And so if it's AI and ML, yeah, like I probably want to be in SF. If it's like I said, manufacturing is probably China. If it's drones, I probably want to go to Ukraine. You know what I mean? Like it completely depends on what it is that interests you and what it is you want to get really, really good at.
And final question. Um, and it's kind of the first question I've asked you about, what to do as a young person. But I want to flip it a little bit. And because you mentioned you have two teenage kids.
Hmm.
Um, how are you raising them for this world that's changed so dramatically? And what actionable insights would you give from your experience to parents who want to make sure they can prepare their kids
Mhm.
for the future?
Yeah, I am very reticent to give advice because I feel, even though I think about this a lot, I feel like I don't know anything. Because, um, so like, let's just say the traditional path, work as hard as you can in high school and like dot every I and cross every T so you can get into the best university you can. And like, in order to get the best internships you can and get the best job you can, like that path still works, right? It's fine. But I do believe there are increasingly other paths that also make sense and hopefully don't suck the life out of you between ages 14 and 18. And so, what does that path look like? I don't know. I think it depends a lot on what you're optimizing for. If you're optimizing for like what is the highest status job that I can get, yeah, that traditional path probably works pretty well. If you're optimizing for something else, and I don't necessarily know what that is, there's probably other ways. Like I'll give you an example in the U.S. just because I know this is the case. Like if you're a high school student in the United States, you can take community college classes. You can just do it. You just sign up and do it. And in most states, like it's close to free, if not exactly free, right? So you have a choice, right? You can either like just throw your life away in the stupid like history, like grade 10 history class, learning the same shit like everybody else is learning, or you can take a history class in a community college in an area that might be slightly more interesting to you because there's a wider variety of possible courses. It counts towards your high school diploma. It also counts as post-secondary like education. You get 2 for 1, and it looks really good on a resume at a university application. That's like an example of a thing, like it's like a small arbitrage that continues to exist, where like if you sort of look around and think about what options are available to you, there's actually a lot more out there that than you might think. You just have to kind of look for it and be okay with doing stuff that is weird. I think that's the thing. The world is becoming clearly weirder in the sense of like higher variance. And so like kind of staying in the median is probably not optimal anymore.
Final question. Um, so you're a young person today, or the young people you've met, the
Mhm.
interns, or even you're among your kids and their friends. What is a question that you don't think is commonly asked by them that should be?
Yeah, it's a great question. Yeah, I think it's hard because a lot of, let's say, relatively ambitious young people um, probably don't ask enough questions. Period. Like there is a path, and there is their understanding of that path, and they just sort of follow it. I think a lot of the questions that ambitious young people don't ask are actually about themselves, which sounds counterintuitive because you think like, oh, in the modern world, like people are sort of much more in touch with themselves. I don't think so. I think that especially the prevalence of social media sort of shapes our perceptions about the things that we should be and care about and want and do in ways that are very hard to disentangle and avoid. And so, like, instead of like actually figuring out what you want to do, you just sort of self-select into like some weird niche, right? Like, oh, like I'm a furry, right? Or uh, I'm a finance bro, right? Like, no, you're you, right? You're not like a thing that falls into one of 1,000 categories. And so I think a lot of the questions are like, what is the thing that truly interests me? And the only way you're going to figure that out is by going out into the world and meeting people and asking them questions about their lives. Like, especially, the person who's 5 years older than you, the person who's like 6 years, 10 years older than you. Tell me about your life. Like, what's interesting? What's not interesting? What would you wish you had done? And, and the idea of like not seeing the world in terms of like, do I fit in this box or this box or this box? But it's more like, well, there's no boxes. Like, just, I need to figure out what's good for me. Is hopefully a more modern world compatible way to figure out things.
I love that answer. Thanks a lot. And to all our audience watching, I loved Augustin's book, The Laws of Trading. I'll put a link in the Amazon for to the Amazon link for the book. And thanks a lot, Augustin.
Absolutely. Really enjoyed it.